Good afternoon and welcome to our quarterly insurance pricing webinar, where I'll be looking at how prices have moved in motor and home insurance over the past quarter and going back a bit further and thinking about what might be coming next for the rest of the year. As always, if you have any questions, please feel free to raise them in the chat. And I'll endeavour to answer as many as I can at the end if we have time to do that. Firstly, a little bit about Pearson Ham. So our mission is to help our clients succeed through better pricing. We're pricing experts. We work across multiple industries in different sectors, including insurance. And one of the things that we do in insurance is market price tracking, which is where the data that we'll be reviewing today comes from. So a little bit about the methodology. We have panels of consumers. So these are real people who have given us their information, which enables us to enter those into price comparison sites. So we have agreements in place with the big four PCWs. So we are allowed to access and run the customer details through and collect the prices that come back. In UK insurance, there are a lot of funny activities that go on in terms of pricing. So we have to be really careful about the information that's coming back and how we present that and package it for our clients. So there is an amount of data cleansing that has to be done to make sure that the price changes that we're reporting are actual changes and not price movements that might be triggered by the activity itself. So if we're running several quotes for individuals, then that might impact some of the prices that are being returned. So we have to make sure that what we're capturing is genuine price movements. And part of that is a panel rotation. So we don't run everybody all the time, but we have a rotation of people to try and replicate genuine customer behavior as much as possible. We have key metrics which we look at, which we've developed in conjunction with our clients to make sure that they get the most out of the data and insights that are available. And we have daily reporting. So we're running these quotes every day, collecting the prices that come back, and that information is available via our online portal, as well as individual daily reports, which are sent to our clients. We're active in several insurance sectors, so car, home, van, pet, and travel insurance. So as I say, we are collecting daily information on each of these markets using real customers and capturing the information that comes back. Just to re-emphasize, we use real people, and kind of the main reason for that is because of third-party data enrichment that might be taking place. So if a quote is run and it's not a genuine person, then the prices that are coming back are likely to be inaccurate. And we always do it with consent. So we don't want to take a risk of any breach of terms of websites or legal action that might result from that. So we always make sure that where we are collecting data, we have permission to do it. Okay, so moving on to the price movements. What have we seen over the past 3 months in the motor market? So it's certainly been an interesting time, but I think we can say that every quarter over the past few years has definitely been interesting. But let's have a look at what we've observed in Q2. So as we can see here, there have been price reductions every month throughout the quarter. And overall, this results in a cumulative reduction in premium of 5.4% on the previous quarter. So prices have come down 5.5% on Q1 this year. So some significant price movements. Probably more so than we were expecting, but I think we can see that the market is becoming much more competitive this year. So looking back to the beginning of the year, we can see how that's played out. So we did observe some sizable reductions coming through in January. There was a bit of recalibration following that. So in February and March, we saw overall prices increasing. So just to kind of reconfirm, the metrics we're looking at here are the average of the top 5 prices that are quoted. So these are the most competitive rates for each of our consumers when we're running the quotes through. So this is a gauge on how competitive prices are moving within the market. So we can see January prices dropped and then some recalibration into February and March. So I would assume that those providers that were putting price reductions in January saw a bigger uplift in conversion than expected. So we're able to put some of the rate back in. And then as we move into Q2, we've seen continuous price reductions each month, so consistently dropping, and that's resulting in the overall movement of almost a 7% drop since the beginning of the year. So that's driven by a January drop, some increases, slight increases in February and March, and then consistent price reductions every month in Q2. If we look back a year, so the past 12 months, we can see the picture. So the prices now are around 12% higher than they were 12 months ago. So prices are up 12%, competitive prices in motor insurance on last year. And we can see a picture there from the beginning of this period, so July, August, September, still significant premium inflation going in, and then a slightly different picture as we move into this year. Going back a little further, so going back over 24 months, prices now are just over 45%, so 45.5% higher than they were 2 years ago. So only a 12% increase on last year, but that followed a significant period of price increases in the market. So that kind of results in this 24-month figure of 45%. So thinking about where we were last quarter, actually the 24-month figure was at 54%. So the price reductions that we've seen more recently have been able to bring that down. So things are kind of slowing. We're seeing more competitiveness within the market, and those price reductions over the past few months really starting to impact. This is a slide you may be familiar with if you are a regular at the webinars. So I like to take it back to a pre-COVID time, so going back to January 2020, to get a feel for what are the different phases that we've seen in terms of price movement within the market. So we're looking at throughout 2020 and 2021, the impact of COVID. So obviously a reduction in traffic on the roads and consequently a drop in claims. So price reductions being passed on to the customers because of the surplus premium that insurers were sitting on due to calculating prices initially based on how many miles somebody was intending to drive, and then actually if you're going to drive 10,000 miles, you're driving 0 miles, then there's something to do to pay some of that back. So that's what we saw in 2020 and 21. We then had the general insurance pricing practices regulatory change, so the ban on dual pricing, which resulted in significant increases for new business pricing. So as new business and renewals rebalanced, then new business prices had to go up as renewal pricing came down. And that's what we're seeing in this period at the beginning of 2022. So again, big increases in January, some recalibration. And then once we get into kind of March, April, May, into July, June, July 2022, that's when the kind of premium inflation starts to flow through. So this is the impact of claims inflation. So there are several factors driving that, which we'll come to later on. But I think we're kind of all familiar with what's been happening in terms of the cost of parts and availability of parts and materials, labour shortages causing delays in terms of repairs, and this having a knock-on effect in terms of the amount of time that insurers have to cover the cost of alternative vehicles for drivers while they wait for the repairs to be completed. So that there are a lot of things driving that. That's a few of them. There are more than that. So inflation in terms of claims inflation, driving up premium inflation, and that's happened throughout the course of 2022, 2023. So we've seen big increases, and then as we moved into this year, we're seeing price reductions flowing through, and some of those in Q2 quite significant. So we're seeing an increased intensity of competition. I think it's been a couple of years since insurers have been in a position to be able to drive material new business growth. So I think this is an opportunity now, perhaps for some of that to happen. So we're seeing more competition within the market and prices dropping. This chart is a sample of the top providers in motor insurance. So this is based on their competitive position, and it's an anonymized sample. If you're a subscriber to our data, then you'll be able to see who these actual providers are and understand their pricing strategies. So what we're seeing here is more consistency than we saw in Q1. So Q1, we did see some prices dropping. We also saw some prices increasing. We saw some drop down and then come up again. But in Q2, there's much more of a consistent picture. So 9 out of the 10 that we're looking at here are putting price reductions through. The magnitude of change is different, but mostly moving in the same direction. There's one outlier here with a slight increase, not 0.7%, but mostly moving in the same direction, which is downwards. Looking at this over a 12-month trended period, so these are the same insurers, and these are the ones where we're seeing the biggest year-on-year price differentials in terms of increases. So this is the range between 15% or 35% higher than the same time 12 months ago. So we can see for these providers, there seems to be a pattern where prices came down at the end of last year and into January, and then came back up again. So we've seen that down and up, and then a flattening off, and through Q2, they've been relatively consistent in terms of reductions that are now being passed on in the market. Looking at that next tranche of insurers, so these are where the year-on-year difference is between -2% and +9%. So we can see actually there's a slightly different picture here where prices have been coming up to November, December last year, and then have started to come down. So that there's been more of a consistent reduction in premium here than there have in the previous slides. So they came down at the beginning of the year, they didn't go up again, so they've continued to put those price reductions in. So we can see there has been some leveling off, but kind of I think the picture overall is relatively clear in terms of what's been happening. So that premium inflation that we observed throughout last year has now ended, and insurers are becoming much more competitive, prices are dropping, and in Q2 that's something that's been observed across the vast majority of large providers that we've been looking at. So I think that there's a more intense competition within the market, and I know that that's a challenge. So it'll be interesting to see how that progresses as we look into next quarter. Okay, so looking at home insurance. So first of all, we'll look at combined buildings and contents cover. So how prices been moving in the home market over the past quarter. So what we're seeing here is prices have continued to increase. So we're not seeing the same as we've seen in motor where prices are dropping, but actually that premium inflation has carried on and continued into Q2. The rate of increase has slowed down. So some of the kind of 0.4, 0.7% that we're seeing in May and June, those are kind of quite small compared to what we've previously been observing within the home market. So if we go down and look at the year to date, so going back over the past 6 months, prices are up 13%, and most of that's been driven by Q1. So we can see those bigger increases coming through earlier in the year, and that premium inflation slowing down a bit in Q2. So we're not quite getting to the point of motor where prices are coming down, but we are starting to see them slowing in terms of the increases that are being passed through. So the latest quarter brings the year-on-year figure to just almost 34.5%. So prices increasing by 34.5% over the past 12 months, so 35% higher than the same time last year. And we can see, looking at this chart, kind of the large increases that are being put through, so averaging around 3% each month over last year. And as we come into this year, things slowing down a bit. Taking a bit of a longer term view. So this is going back over 2 years. So over the past 24 months, we're now seeing home insurance prices 63% higher than they were 2 years ago. So significant increases. And again, we understand the claims costs that have been driving that. So again, there's a lack of materials, cost of materials, rebuild and repair, delays because of labor shortages. So all of those things combining to drive the cost of claims up. On home, there's the double whammy of claims frequency. So we're seeing the unusual and extreme weather events causing floods, storms, resulting in that, and also at the other extreme, the periods of very hot weather, which are driving up subsidence claims as well. So I think on home, probably suffering a bit more than car in terms of cost of claims and how those have moved. And from the people that we talk to, sounds like there may still be some way to go on home, where a car, people are feeling a bit more comfortable. I think on home, we're still seeing a bit of concern about where things are and where they need to get to. So this is a similar view as motor. So looking at 10 of the biggest providers within the market, and we're seeing that some of those increases are still pretty strong in Q2, but they're dropping off, and we can see there's a couple here where reductions have been observed in Q2. So 0.4%, so there's a plus 0.4, so fairly flat, but there's also one here with a 3% reduction on the previous quarter. So I think that gives an indication of what's happening, where things are starting to slow down. Rate increases are slowing down, and we are starting to see some reductions coming through, albeit much smaller in terms of the number of people putting those through and the magnitude when compared with motor. Looking at those providers with the biggest year-on-year change, so this is between 43 and 70% up on last year. We can see it's been kind of relatively consistent, that the prices are moving up each month by a similar amount, and not much excitement in terms of that chart. If you look at the next tranche, this is where prices are between 20 and 31% higher than the previous year. There's slight differences, so we can see that there have been some periods where prices have jumped up but then come down again and kind of flattening off. So we can see one or two here where prices are actually lowering, and others where we're seeing a flattening off of rate increases. Looking at contents only, so similarly we are seeing kind of a slight reduction here, relatively flat apart from June, where we've got about 0.5% reduction coming in. So again, it's not quite aligned with combined cover, but the trend quite similar in terms of what's happening within each of those quarters. So we can see there were increases coming through in Q1. In Q2, those have kind of changed to kind of relatively flat and slight reductions being observed. Looking back over the course of the year, so prices 14% higher than this time last year. So the price movement much closer to motor actually than to combined buildings and contents cover, and I think that reflects the additional costs that have been experienced by kind of buildings cover. So with the kind of the flooding and subsidence claims, then that's going to be impacting more, which is driving the combined costs up at a higher rate than contents only. Going back over the past 2 years, again, a very kind of conservative increase when compared with what we've seen on combined buildings and contents cover. So the kind of the buildings claims costs really impacting and driving prices up there. So we're seeing a kind of a bit more volatility within contents only, but I mean the overall pattern is similar. So price increases and premium inflation throughout 2022, 2023, dropping off as we get into this year and starting to see some reductions as we are in motor. So there are a few different things happening at a sector level as we look at Q2. So again, there is a bit more volatility in contents only, so we can see that there are price increases, there are some reductions coming through as well, and the level of those changes are kind of quite inconsistent. If we look at some of the trends over time, so this is where prices are between 26 and 50% higher than last year, then we can see actually those have been kind of relatively consistent, that there's been a bit of up and down, but they've all been moving in that direction, some of them fairly steadily. And then this is the kind of the next tranche where we're looking at prices between -2 or plus 19% up on last year, where things have been going up in 23, and then once we get into this year, kind of more or less leveling out, if not dropping off in terms of the kind of price movements that we're seeing. So a few different approaches being taken, resulting in that overall picture that we're seeing. So what might we expect to see in Q3 and for the rest of the year? So I think it's a question of to what extent has the premium inflation that we've seen in each of those sectors addressed the cost challenges. So I think we're all familiar with what's been driving up costs and an uplift in claims frequency as well. So there's the general inflation has been up, which is having a knock-on effect in terms of managing kind of claims in terms of people and buildings, utilities. Cost of parts and cost of materials has been a challenge. Availability, so we're getting a kind of a knock-on effect from COVID. We're also seeing some kind of Brexit challenges, and the availability and the cost of parts is material. Labour shortages, again, that's causing a challenge in terms of delays to repairs and to rebuilds. New technology and the cost of repair is also causing a problem in motor, and the overall cost of living crisis. So we do tend to see claims increasing where there is kind of challenges in terms of cost of living, more fraudulent claims. So all of these things combining are really causing the problem. So to what extent has the premium inflation addressed this? Well, some of those challenges remain. So parts and materials pricing, availability, labour shortages, they continue to cause problems. New vehicle technologies isn't going to go away, so there's only going to be more of that. So again, there's the potential impact on repair costs. However, there has been some easing. So we've seen inflation rates drop down. So in May, 2.8%. We've seen that in kind of terms of food pricing has dropped down. So that should be relieving some pressure on households and the overall kind of economy. We have seen significant levels of premium inflation in motor and in home over the past couple of years. Some insurer results looking relatively positive in 2023. And what we're witnessing in motor now obviously points to the fact that insurers are feeling a bit more comfortable and are starting to put some reductions in and try and stimulate some of that new business growth. So that's what's happening in motor. For most providers, we're seeing premium inflation catching up with costs and growing confidence. However, I think some caution would be advised as we see kind of prices starting to spiral downward. So we'll see in Q3 whether things settle down or if that battle for new business continues as it has been doing. On home, premiums, again, they have increased significantly. So I think there must be a point where we're getting close to, if not at, premium inflation catching up with claims inflation. Certainly for some insurers, they will be in a better position than others. And we are starting to see some price cuts in the market. So as we're looking at the kind of the trends, not all of those providers are moving in the same way when we're looking at some of the kind of the flattening out or price reductions that are coming through. So I think the difference that we're seeing in the home market versus motor is confidence in the future. I think motor insurers are more confident in the predictions that they're making. I think the challenge with home is the unpredictable weather events. So we're seeing climate change, and I think that's only going to get worse. So I think it's the unexpected weather events which cause the major problems and the increase in claims and costs for insurers. And I think there's just a little bit of uncertainty and lack of confidence in terms of what might be happening next. So it only takes one or two big floods or storms to kind of throw out any predictions. So I think it's the unpredictability of these weather events that will be causing some concerns. However, as I say, from what we've observed in the data, we are seeing a slowdown in premium inflation in home. So as I said, I would expect that insurers are at a level where premium inflation has caught up with claims inflation. It's the future which is uncertain now. So it may be for those who feel more confident that we'll start to see a bit more competition within the home market as well. So perhaps not to the same extent as we've seen in motor in Q2, but I think I would still expect to see more competition appearing in the market as we move into Q3 for home. That takes us to the Q&A. I think we've got 1 minute left, so we probably Haven't got a lot of time to answer the questions. Let me just have a look at some of the questions that have come through. Where do you think motor prices are going to go by the end of the year? Again, it's a difficult one to say. They could continue to drop. It wouldn't surprise me if there was a price war, but I would expect if we may see more settling down. I think initial cuts in Q2 will probably reduce. I think we would continue to see some price reductions, but they're not to the same extent as we have done. Okay, so any questions that are still outstanding, I will address by email personally. And so if you have any, then just please log them. If you have any questions for me, then please feel free to contact me. My email address is on the screen now. So stephenkennedy@pearsonhamgroup.com, and I'll be happy to answer any questions that you might have. Okay, so thanks very much for tuning in. And I look forward to next time when we'll see what's been happening in Q3. Have a good day.